Hello everybody, this is the first video in the channel, which is just going to be a quick introduction on what accounting is. Now, first of all, you do not need to be doing accounting in university to become an accountant. Actually, there are many routes to become an accountant, and usually it's certifications like AAT, ACCA. If you want me to do a separate video on that, comment down in the comment section and I'll make a video about everything you need to know about it. And also, something I really noticed is that actually, like generally, free resources for accounting is very minimal. And that's what pushed me to do videos on accounting. I wanted to share my knowledge to you and help everybody who is going through tough times understanding what accounting is. So, these are the things we're going to go through in this video. So, what is accounting, purpose of accounting, financial statements, what is bookkeeping, source documents, books of prime entry, and accounting cycle. So, first of all, what is accounting? Now, accounting is the process of recording, summarizing, and interpreting financial information to help users make informed decisions. What do I mean by that? Actually, so let's say you have a business that makes tables. I'm going to use this example a lot. So, sorry, but this is the only example that comes up to my mind every time. So, your business makes tables, and you have to buy wood from other suppliers to make the tables. So you buy stuff, right? Then you make the tables, you sell them to customers. So it's a sort of like, and then you also use money to pay the workers, the rent. There's lots of stuff that needs to be paid, but in the same time, you're getting paid from your customers. So all of this information, you have to record it. You have to then be able to interpret it by making financial statements in the end of every year. And then after that, you can give them to the business owner so that they can be able to make decisions. Because imagine, for example, you wanted to expand your business to not just making tables, but also making chairs. However, your business, you you did not have any accounts, you don't know how your business is doing, you did not record all of this information, and you don't even know what is your profit. So then you can make a risky decision without knowing your position financially uh, in the business. So it's very, very, very important for decision making. And that's actually all what businesses use to make decisions. Now, what is the purpose? I think I talked about the purpose already, but the last thing that I did not talk about, it is ensuring legal compliance, right? So tax reporting and stuff like this, which is, because usually whatever income you have to make, you have to pay taxes for it. So if you don't have accounts for your business, how are you going to know what your income is? And therefore, how are you going to know what taxes you have to be paying? So this is exactly what accounting is. Now, we've got many things in accounting, or like let's say stakeholders that are very much interested in accounting. First of all, we have owners and shareholders. Obviously, they needed to see if the business is doing well, what decisions they have to do, and what changes they have to do. They need to see if they're actually making profit. And they've got managers. Now, managers need to plan, control, and make decisions. And without financial statements, without knowing how the business is doing overall, they can very much do risky decisions without knowing the profit. Then we've got creditors. So, for example, in your table business, you are buying wood from a supplier and you tell them, I want to buy it on credit. What does that mean? So, it means you want to buy the wood and you don't want to pay them. You want to pay them in the next month. And the reason that this happens is because most businesses, they don't get money easily that much. So it's much better to pay later, which makes sense. So this person or this business I'm buying wood from, they need to have accounts, because if they don't keep in track all of the people, all of the businesses that are buying wood from them on credit, then they could be lost. They wouldn't know how much money other businesses owe to them, which is very dangerous. And then we've got the governments and tax authorities. So they need to know how much business makes. They have to see their accounts, see their income statements, and be like, all right, you have to pay us this much tax. Obviously, you have to do it. And then we've got investors. Now, the interesting part about accounting, businesses are legally required to publish their accounts. Not all of them, maybe, but most of them, so that uh, people can look at it publicly. Now, that might raise concerns like competition for other businesses. So other businesses who are competitors with you can see it. But investors, so let's say someone wants to invest money into your business, they're going to look at your accounts and be like, okay, you guys are doing very well, you have good income, so let's invest. And we've got employees, but I don't think that's a good like example, so I'm not gonna delve through it. I just wanted to make more examples. Anyways, now we're going to talk about financial statements. I talked about financial statements a lot in the video, but what is it? So we have two different financial statements, the income statement and statement of financial position, right? The income statement is a summary, okay, of the profit that the business made. So what we do is we add and subtract stuff to end up with a net income of the business to know how much money overall the business made. We usually do that by getting the amount of sales or revenue the business made, then we minus from it the cost of sales, so how much it costed to make the product, and blah blah blah. And then we've got to then minus from it stuff like expenses, and then you can add to it other types of income. So it's all about adding and subtracting all of the expenses and stuff, and then we end up getting an income. And usually we get an income before taxes, and then there will be some sort of tax expense you'll have to minus from it, and you get a net income. So it's very simple. Now, this is not a video just explaining on what an income statement is, obviously. It's just an introduction to get you excited to what accounting is. Later in the future, there will be videos about income statements. You can check them out. And then, second of all, we've got the statement of financial position. Some people call it balance sheet. Now, most people actually call it balance sheet. I love calling it statement of financial position because in that way, the definition is literally in the name. It shows the financial position of a business at a specific point in time. So it's divided into two sections, assets, and then the second section is capital and liability. Sorry. So, as I was saying, and then the capital and liability will be like stuff that the business owes, and then the assets is that stuff that the business owns. Okay, so we're not going to delve into this. It's a bit complicated to understand from the beginning, so it's just an introduction, but that's how it is. Now, second of all, what is bookkeeping? Now, you might have never heard of what bookkeeping is. Some people might have, And most people will just think that bookkeeping and accounting is the same thing. So, not really, actually. Accounting is a full process. So, in accounting, one of the processes of accounting is bookkeeping. So, bookkeeping is just the process of recording financial transactions and keeping them in books of accounts, right? So, we record every financial transaction in chronological order, that meaning everything should be very accurate, even the date at which the transaction has happened. And then we also have to ensure that financial records are accurate, provide the base for preparing financial statements. Right. What do we mean by that? So remember these financial statements. You've seen how we've got so much information there. Where do we get that information? And actually, the information we get it is from bookkeeping. So bookkeeping is where you make accounts, you fill in the information and everything, you end up with some amounts of money, and then you can fill in your income statement. So it's kind of like a puzzle. Now, next is ensuring that the business complies with legal and tax obligations. So obviously tax. And lastly but not the least is helping detect errors and fraud. Now, in accounting, lots of errors can happen, and we can usually be able to get rid of these errors by preparing trial balances, suspense accounts, and stuff like this. These are a bit uh, more like we would talk about this later and later on in other videos, because you've got to know so many other things before knowing how to correct accounts. So you have to first know how to make accounts, obviously. Now, source documents. So think about it this way. Now, your business, which makes tables, and you go buy wood from another business. When you buy wood from the other business, you get something like a receipt, just like a receipt you get from a shop, right? That receipt will have the amount of money you paid to get the products, to get the raw materials to make your own stuff. Now, there are so many different types of receipts, and what we call them in accounting is source documents. I'm not going to read off the whole slide. Obviously, you can read it, you can pause it anytime you want, but we're going to explain this more in detail in other videos, obviously. Now, what we do is we take these source documents and then we enter them into books of prime entry. So, whatever amount we had in those receipts, we enter them into sales journals, purchases journals, sales returns, purchase returns, cash book journal, general journal. Now, books of prime entry, as it is in its name, prime entry, right? It's like a rough account. So everything is not very much like changes can happen. It's not finalized, because then later on we make another account in something called ledgers, which don't worry about it. We will explain it more in other videos. This is just a quick introduction, all right? And then we will be able to use these ledgers to balance off accounts. Then we use them in financial statements. So you see how the steps go on. And that's exactly what the accounting cycle is. All right? So the accounting cycle, first of all, a transaction will occur, sorry. Then you will get a source document. Then you will enter them in a book of prime entry. Then you will post them to ledger accounts. Then you will prepare trial balance. So we can know that the debits and the credits are equal. And then we know that our accounts are correct. If not, which most of the time it's not always correct, we we correct them using different ways, and then after that we prepare financial statements for the business owner and managers to use. so that they can see what they can do, like decisions and stuff like this. Now, so this was the end of our video. I hope this has created curiosity for you to learn accounting. It's very fun, and not like everyone says, you don't need to be good in maths. Accountants don't are not even that good at maths because all you have to do is just use a calculator. I mean, you're not gonna do maths, obviously.